Hello everybody, thank you all so much for checking out this video. So in this video, I'm going to be going over why I think the major indices, the S&P 500, the Dow, and possibly even the QQQ or the NASDAQ in other words, are about to roll over or about to have a large rotation. Okay, so jumping right in, all the major indices are at an incredible all-time high. If you look at the Dow, the SPY, or the QQQ, they are all at the very top and setting record highs almost daily, it feels like at this point. And then on top of that, but quite differently, we have the IWM, or in other words, the Russell 2000. So this indice specifically covers smaller companies in the stock market, and it has a total of 2,000 stocks that make up the index that are a good diversification of small cap stocks. So if you look at the Russell 2000, you'll see it isn't the same pattern as those other indices. What you'll see is instead of it going straight to the moon like the Dow, the S&P 500, or the NASDAQ, instead the Russell 2000 has actually kind of been trading sideways in an up and down, really good swing trader type movement actually. But we haven't been seeing it do exactly what the other indices have been doing. And then even more recently, what we've been seeing is a large spike in Bitcoin. In fact, at the time of recording this video right now, it is sitting at $44,165. Earlier, just back in June, we actually saw Bitcoin hit right around $29,000. So since then, it's had quite a great recovery to around $44,000, and most of which has just happened in this last few weeks. On top of the indices moving to all-time highs, we've also been seeing some of the highest inflation readings that we've ever seen in our economy. This is causing a lot of politicians and a lot of different economists to really worry about what is actually happening when it comes to inflation. Now, as far as the Fed is concerned, they're still holding their same opinion that they've held ever since people started to worry about inflation, that this is all going to be temporary and that it's just essentially still rippling effects from COVID. In other words, they're trying to say things like supply chain issues that are causing inflation right now are temporary. Now, those are just things that Federal Powell is saying. Now, if we listen to some of the other federal governors, such as Fed Governor Waller, we see him talking about in a CNBC article that he has actually seen or heard anecdotal evidence from businesses that right now they have more pricing power than they ever have had. Where in other words, consumers are more willing to pay whatever price it takes to get that item. Now, why that's a problem is because if consumers just say, no, I'm not willing to pay that price for the product, then the company is going to have to restructure pricing and prices can go back down and actually have deflation. Now, on the opposite end, what he's saying that we were seeing is it goes up because these companies say, hey, I have more than enough people wanting to buy my product at whatever price, so I can put whatever price tag on it that I want to, and it's still going to sell. And that leads to more inflation. The other thing that Fed Waller was saying is that he and the rest of the Fed are really closely watching the jobs. Now, we've known for a really long time that they've been watching jobs kind of as a gauge to what our recovery has been like so far. But this time in the CNBC interview, he actually gave us a really good hint of when we might start to see the Fed slow down or taper purchasing bonds. Essentially what Waller said is that if in the next two job reports we see hotter or at around 800,000 jobs added, that we can expect the Fed to possibly start to slow down the bond buying. Now, of course, ironically, 5 days later, here comes our first job report after his interview for July at 943,000 jobs added. So that is a substantial beat. That is a very good job report number. And just after that job number came out, we saw a really rapid spike in the 10-year Treasury note. Right here where you can see that we went all the way from a 1.1, the lowest we've ever been to, back up to a 1.303 as of the time that I'm recording this. Now, what that means is that we're starting to see people shift back into bonds. And why do people shift into bonds? It's because that they want less risk. If they're getting out of stocks or real estate or cryptos maybe and putting more money into bonds, they're trying to lock in a consistent rate or essentially de-risk their assets. So now you're all thinking, okay, so what does this all have to do with the stock market and what is the stock market going to do? You said originally that you believe it's going to turn over and that you were going to maybe see a rotation. Now get to the point. How is this all going to happen? So of course this is not financial advice, but here is my current theory of what I think is going to happen in the stock market in the coming few months or weeks. First thing, I think we're going to see all the major indices correct. We're going to see them start to turn over. And correspondingly, that's going to be a rotation into the smaller cap Russell 2000 style stocks, and I think that we're going to start to see those take off. Now, the reason I think that we're going to start to see those take off is because a lot of those stocks are on sale. If you go look at stocks like C3AI, EVgo, SoFi, Palantir, a lot of these stocks are off of their all-time highs by quite a bit. So I can see a lot of these large hedge fund investors start to rotate money out of these overbought big stocks like Apple, Microsoft, Google, and go into these Russell 2000 stocks. On top of them going into the Russell 2000 stocks, I also think that we're going to continue to see this crypto run. The reason I think crypto has a chance to keep running too is because it is also far off of its all-time highs. Not to mention that some of the people who may not believe the Fed about inflation also are seeing it as an inflation hedge. So it's almost got two things kind of going for it right now. So essentially, to sum that up, I see the Russell 2000 stocks starting to rally as well as crypto start to rally as we see a pullback in the S&P 500, Dow, and NASDAQ. Now, one last thing we definitely have to mention is Delta, because we are currently seeing a surge again here in the United States. And last time we had a surge of COVID in the United States, we also saw the stock market go down. So say we see Delta continue to surge and we start to see more lockdowns, we start to see more mandates go across states and the federal level, then what can we expect the stock market to do? Well, in my own opinion, I really think that we're going to see a lot of what we saw last time, to where tech and small growth companies, still things that are innovation style stocks like Cathie Wood stocks, are going to do well in a COVID environment. Now, I definitely think especially things like connection services, things like Zoom calls, telehealth, those types of things will do well if COVID is going on and running rapid, as well as the vaccine producers. I also feel really good about EV still in a COVID type of market, because I think that a lot of large investors still know that no matter what's happening with COVID, EV is still going to be the future of our transportation system here in America. Especially now with President Joe Biden signing an executive order to have 50% of all new car sales by 2030 be electric vehicles. So here's how I'm going to position myself in the market based on the current market catalyst. First things first, I'm going to be trying to increase my cash. I'm going to start to hoard more cash. I'm also not feeling super warm and fuzzy about the market due to the inflationary fears that I do have. I am going to be keeping all of my EV and my technology plays that I have, especially the small cap tech and EV companies, but I may start to reduce some of my call options. Now, with this cash that I'm going to be hoarding aside, I don't want to just let it sit there and do nothing and not be investing at all. Instead, what I'm going to be doing is kind of using that cash and locking it up by selling puts and selling calls. So I'm going to be selling puts right now on these small cap Russell 2000 style companies. Things like EVgo is a perfect example. I've been selling plenty of puts on them, as well as SNPR. I think those are both really great companies to be selling puts on right now. Now, I've been selling calls on larger name companies, things like Apple, Microsoft, Visa. Those are ones right now that I'm selling call options on. Those are ones right now that I believe are bound to correct to the downside on their trend channel, and so I'm going to be selling calls on those. So what that's essentially letting me do is yield farm with my cash that I'm going to be having in my portfolio, so I can still be growing my cash and investing my cash, but it still makes it to where if I do get assigned, I'm getting into stocks that I am bullish on long term anyways. But for the most part, you're not getting assigned. So it's just letting you yield farm that premium off of selling other people contracts. Now, the only other thing that I would suggest doing is hitting that like and subscribe button down below, as well as the notification bell, so you get notified every time that I upload. I have a really cool video coming up on how I added $200,000 to my net worth. So go ahead and subscribe if you want to see that video. Other than that, I just want to thank you all so much for checking out this video. Again, I hope you guys have a great and profitable trading week ahead, and I'll see you in the next one.